Good morning. My name is Dr. Deepika. Today I'll be discussing about a very important topic in accountancy is profit and loss account. Profit and loss plays a very important role in the organization to know the revenue generation of the company. So after preparing the trial balance, the next step is preparing the final account, which include trading, profit and loss account and the balance sheet of the company. So in this topic, we will discuss about trading and profit and loss account. A business basically needs to prepare trading and profit and loss account first before moving on to the balance sheet. Firstly, trading account and profit and loss account is prepared, and after that we move on to the balance sheet. Trading and profit and loss account, basically it is very much useful to identify, to know the company's gross profit and net profit which the company earns. The main motive of preparing trading and profit and loss account is to determine the actual revenue earned or the losses incurred during the accounting period. Trading and profit and loss account are two different accounts which is formed in a general ledger. First is trading account, we prepare the trading account, and second the company prepare profit and loss account. So trading account is the first part of this account. It is used to determine the gross profit of the company, what the company earn, or the gross loss of the company. While profit and loss account is the second account of the company, which is prepared to determine, to know the net profit or net loss of the company. So these two accounts is very much important for the company. Firstly, trading account. Trading account is used to determine the gross profit or gross loss of the business which the business is incurred during the trading activity. It is related to buying and selling activity of the company. In trading account, we basically include we have the pro forma, we have 4 column, debit side and the credit side, particular then amount, particular then amount. In the debit side, we include all the direct expenses, purchases of the company, and on credit side we include sales and closing stock of the company. What do you mean by direct expenses? The expenses which are directly related to the factory, to the production part, it is known as direct expense, like wages, power supply used in the factory, water supply, electricity supply. These are the direct expenses related to the factory, so it is known as direct expense. The basic definition of wages and salary, both are given to the employees, but wages means these are those money which is given to the employees who are working in the factory, in the manufacturing part. We give them wages, so it will be a direct expense for the company. On the other side, salary is the money which the employer give to the employees who are working in the offices. So they are not directly related to the manufacturing part, they are related to the servicing part, so we pay them salary. So it is a indirect expense which will come in profit and loss account. So all the direct expense comes in trading account, and all the indirect expense which is indirectly related to the factory are the part of profit and loss account. So gross profit is what? We calculate gross profit by net sales minus cost of goods sold. Preparing trading account, it is prepared by closing all the temporary purchases and revenue account of the company, making all the adjustment in inventory account and closing the entry. We will more understand the trading account with the help of an example. This is a question. We need to prepare a trading account. Stock 1st April, it means it is a opening stock 10,000, purchases 1 lakh, wages 5,000, carriage inward 1,000, sales 1,70,000, carriage return inward 5,000, return outward 8,000, sales tax paid 15,000, fridge 500, Otrio duty 2,500. This is the information based on this information we need to prepare trading account. And the last additional information is closing stock as on 31st March is 20,000. Now this is the performer, how to prepare trading account, which I have already discussed. Left side is always the debit side and right side is credit side. Particular amount, or in the top of the column we write trading account for the year ended, whichsoever is the date, 31st March, 31st December, we need to quote that particular date, and this is for the accounting year. And in the left side we denote with to, and in the right side we denote with by. This is the performer, how we write the trading account, how we make the performer. This is the fixed performer. To opening stock 10,000, to purchases 1 lakh, but on the other side we have return outward. The other name of return outward is purchase return. So 1 lakh we have purchased and 8,000 we have returned it. So we will minus it. So the current purchase is 92,000. Then to wages is expense, so it will come in the debit side. Expenses are always debited according to the golden rules, which we have already discussed in our previous slides. 5,000 to carriage inward 1,000, freight 500, octio duty 2,500. So these are the expenses of the factory, direct expenses, so it will come in the debit side. And on the credit side we write sales. So by sales 1,70,000, and we have some sales tax. So 15,000 we will less it. The amount will be 1,55,000. This is the actual sales. Other than this we have return inward. The other name of return inward is sales return. So we made a sales and there is some return of 5,000, so we will less it, and the final amount is 1,50,000. This is the sales, and the closing stock is 20,000. So we'll make the total. In the down, total will be same. The highest amount will be quote on both the side, 1,70,000, and the balancing figure, it is in the debit side. It means the credit side amount is more, so the balancing figure will be on the debit side. If the credit side amount is more, then it will be a gross profit. So we have written the gross profit to profit and loss account, that is 59,000. So this 59,000 will be transferred to profit and loss account. So this is the way to calculate, to make a performer, and to calculate trading account of the company, and to calculate the gross profit of the company. Next example, I'll be discussing about profit and loss account, how to prepare a profit and loss account of the company. So this is the amount: gross profit 2 lakh, salary and wages 10,000. One more important thing, like if salary and wages, if first amount is salary, then it will come in the your profit and loss account, and if first amount is wages and salary is given, then it will come in the trading account. But in this question we are written salary and wages, so 10,000 will be coming in the salary account, profit and loss account. Next, commission allowed, commission received, interest paid, interest received, carriage inward, freight outward, discount allowed, discount received, dividend received, rent paid, rent received, bad debt recovered, brokerage paid, general expenses paid, miscellaneous income, depreciation on machinery, postage and telephone charges. So these are the information. Based on this information we will prepare profit and loss account of the company. So this is the performer, how to prepare profit and loss account. Left side is of the debit side, right side is of the credit side. All the indirect expenses and losses are written on the debit side, left side, and all the incomes and gains of the company are written in the right side, that is credit side. So this is the performer. First, profit and loss account for the year ended, whatever is the year, we'll write 31st December or 31st March. Based on this we will prepare. Left side we always denote by to, and right side we denote by. So the gross profit will come in the credit side by gross profit, and if there is gross loss it will come in the left side, that is debit side. and all the expenses, to salary and wages, to commission allowed, to interest paid, to carriage outward, freight outward, discount allowed, rent paid, brokerage paid, general expenses, depreciation, postage, these are the indirect expenses of the company, so it will come in the debit side. On the other hand, by commission received, interest received, discount received, dividend received, rent received, bad debt recovered, and by miscellaneous income, these are the indirect income of the company, so it will come in the right hand side of the profit and loss account. So we will total it, both the side the total should be same, the highest total will be written in the total amount 2,28,650, and balancing figure is coming in the left side. It means credit side is more than the debit side. If credit side is the income side, it is more than the debit side, income side is more than the expense side, it means we are having net profit. On the other hand, if expense side is more than income, then there will be a net loss. So in this question, your income is more than your expenses, so the balancing figure will come in the left hand side, that is to net profit we are written transfer to capital account, that is 1,84,400. so this is the way, and this net profit will come to the balance sheet in the capital, in the liability side, in the capital. So this is the way how to calculate your profit and loss account of the company, and next account will be a balance sheet that we will discuss in our next video. Thank you so much.